Thank you for joining me for this video. Today we're going to look at stock market trading triple bottom chart patterns. This can be used to either exit a trade if you're already in a trend trade to the downside, or can also be used as an entry to go long. So I'll show you both ways that this works and the 4 steps to trade this with fantastic accuracy. All right, so by the way, this is a follow-up video to the double top trade strategy that I use for stock market trading, and you might want to check that one out on my video tube or my YouTube as well. So let's talk about this though, and there's 4 steps. We're going to expand a little bit on the double top strategy and add a few things and answer a few questions that came from that video. So before you can get any type of bottoming pattern, in this case a triple bottom, you need to have a trend. So that's step 1, is you don't have a bottoming pattern, in this case a triple bottom, until you've had a trend. You might have equal lows, but you do not have a triple bottom. That's step 1. Step 2 is the cycle low. So first thing is we've got an extended trend here in 5 and 7. That's what we're looking for, especially if you're going to go long. As you know, the trend is your friend until the end. I'm sure you've heard that. So therefore, when the trend is extended, it's no longer your friend, and that's the timing when we are looking to then take a trend reversal trade. So the timing of it has to do with 2 things. Number 1, how long that trend's been going. 5 is average, 7 is extended, so now the odds are no longer in the favor of those who are going short. And then we look at our timing indicator down here as well. This little pattern on the indicator is key. And by the way, if you're interested in my cycle indicator, I'm happy to share that with you absolutely free. I do free webinars once in a while where I give that indicator away and give you a tutorial on how to use it and teach you that pattern and some others. So feel free to send me an email at barry@topdogtrading.com and request that indicator, and I'll let you know when the next webinar is coming up where I give it all away for free. I normally sell this, but for my YouTube friends, I do offer it for free. Just subscribe to YouTube, and then it's really for my subscribers. So subscribe and you're in. It's pretty easy. Click the little red button down there. Okay, let's talk about step number 3. So step 3 is a momentum shift. Now, what do we mean by that? Oh, first of all, let me draw on here the triple bottom so that it's real clear. I just want to make sure everybody can see this. So there it is. And what we're looking at is that's 1, that's 2, and that's 3. All right. So that's the triple bottom, just to make sure. I always see these things, and I got to make sure other people are on board and they see it as well. Okay, so then we look at the momentum shift. Now, the momentum indicator is down at the bottom, and that is just a regular momentum indicator. Let's see. I don't think we're going to be able to do that. Yeah, I'm going to have to take those arrows off. Okay. So let's bring up our horizontal line again. So as we're looking at these 3 lows, here's our momentum indicator. It's just the indicator called momentum. And it's a 14 period, by the way, if you're interested. So at this point, you see momentum's still about the same. And then here it still makes a lower low, and well, lower high and lower low. And then here's our momentum shift. Boom, it comes cranking up above here. And so that's why when we get to this spot here where we get the 3rd low, remember that's 1, 2, and then here's number 3. Look where momentum is now. It's way up there. That's your momentum shift. So way different than it was here or here. So I want to wait for that. Momentum, by the way, will often lead price. It is a potential leading indicator. And what's happening down here often with these triple lows is accumulation is happening. You'll notice the market doesn't really go up too much. So what's happening is often accumulation, and they try to keep price low because they want to keep buying at a lower price and not have to pay a higher price. But the momentum shift is revealed even though you can't necessarily see it too easily in the price pattern, and that's why the indicator just makes it super clear. And so that's step 3. Now, step 4 is support. We want to have some sort of support coming into that. So when you're trading a trend and you're looking for future support, Fibonacci or extensions are real good. And we just go from a major swing high to a swing low to a swing high. And, yep, just happens to come in there. And 138.2. So from this high to this low, it was a measured move. 100% is a measured move. And then from there to there, it's 138.2. So we do have a support level Fibonacci extension. All right, now let's talk about where to actually get into this thing. So the traditional approach is to wait for the market to break above the high that is between these three lows. So that would be up here. And they would get in over here. For me, that's late. So that would mean you would get in here. And that's conservative. It's not a bad entry, but to me, it's just too late. One of the hallmarks of professional traders is that we like to get in early and before the retailers. And so that's what I like to do. So I would just get in at this cycle low with momentum cranking up, and I would get in 1 penny above the high of that bar. I'll go ahead and draw that in for you. Really, this is the main bar right there. 1 penny above the high of that bar, put my stop 1 penny below the low of that bar, and that's it. And then I'm in. So very, very little risk, 1 bar risk. And then my goal is to catch a trend going in the opposite direction. And that doesn't always happen, by the way. Let's just be clear on that. It doesn't always happen. But in this case, it does. And that is the purpose of a trend reversal trade, is to catch a new trend in the opposite direction before it is confirmed. Once it's confirmed, everybody sees it. You're too late to the party. Again, 5 waves is the average. So I'd be getting out at wave 5, combined with that cycle high. Again, momentum coming down. Great exit. And so look at this. This is what's so great about trend reversal trades, is they are the single best risk to reward ratio trade there is. So my risk is that bar. My reward is, something like that. So huge reward, tiny risk. And of course, that's what we're always looking for. So that is it. That's the stock market trading triple bottom chart pattern. Test it out on your own. Look for it and look for these various factors. And by the way, hey, if you like this video and you're watching it on YouTube, please click the thumbs up icon below. And also leave a comment. I'd like to hear what you have to say, any questions, any comments, because that encourages me to keep creating free tutorials for you. I like this to be kind of a little community. I'm also giving away one of my favorite trade strategies with all the rules, and it's called the rubber band trade. It has a very, very high win-loss ratio. It's a simple strategy. You can learn it in about 26 short minutes. So you can get that video explaining that trade strategy absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, just click the little eye with a circle around it in the top right corner of this video. And if you're not watching this video on YouTube, there's probably a link below or an opt-in form on the side. Once you do that, I'll personally email the video to you. Thank you for joining me for this video. Today we're going to look at stock market trading triple bottom chart patterns. This can be used to either exit a trade if you're already in a trend trade to the downside, or can also be used as an entry to go long. So I'll show you both ways that this works.